You have $60 left after rent. You put $20 of it away anyway. It feels pointless. $20 doesn't change anything. You do it again next month, and the month after. You don't call it investing yet. You call it not spending. A machine turns on quietly in the background. You don't notice the sound. You open your first account. Robo-advisor. Auto invest turned on. $50 a week, pulled before you can talk yourself out of it. 6 months in, your balance is $1,340. Your contributions are $1,300. $40 in growth. You screenshot it anyway. You tell yourself the number is small. You are right. But the number was never the point. The habit is the point. You are not an investor yet. You are a person practicing not touching money. You cross $10,000. You stop checking daily. You read one article on index funds and never buy an individual stock again. The market drops 12% in a month. Your balance falls by $1,200 overnight. Your thumb hovers over the app. You close it instead. You open a book. 3 weeks later, the market recovers. You didn't do anything. That was the win. You are starting to understand that doing nothing correctly is a skill. The machine is running. You are just starting to hear it. You cross $100,000, somewhere between year 4 and year 6, without noticing. You max your retirement account without thinking about it, like brushing your teeth. You calculate your real return after fees for the first time. It shocks you. You move funds. You never look back at the old ones. A friend asks for advice. You give the boring answer. They want the exciting one. You know exactly how that story ends, because you tried it once. Your portfolio earns more in a good month now than you used to save in 3. Nobody notices. Nobody claps. That's how you know it's real. You cross $500,000. The machine is loud now. You can feel it in your sleep. Every dip is now a purchase, not a panic. You have done this enough times to trust the pattern. You lose $40,000 on paper in a single week. You add money anyway. You tell no one. You stop measuring your life in years. You start measuring it in decades. Insurance is airtight. Documents are signed. The boring parts are finally finished. People start calling you lucky. You don't correct them. You know what luck actually cost you. You are not saving anymore. You are allocating. You cross $1 million. The floor changes under you without asking permission. New paperwork appears. New doors that were always there, just never opened for you before. A private opportunity lands in your inbox for the first time. Minimum buy-in, multi-year lockup, projected return higher than anything public. You read every page before you say yes. Then you say yes without hesitation. You realize the wealthy were never using a different strategy. They were using a different menu. It wasn't hidden. It required capital to see the capital. Now you have both. You cross $5 million. You stop saying the number out loud. A wealth office calls you back within the hour now. That used to take weeks. Your tax rate this year is lower than your first year working. That took 6 weeks of structuring, and none of it was an accident. Trusts, holding entities. A foundation with your family's name, not yours. You sit on a board you didn't apply for. Capital creates proximity whether you ask for it or not. You realize compound interest quietly became something bigger than a return rate. It became distance between you and the version of your life where every dip was a crisis. Your family's accounts pass into the next generation before you're done using them yourself. Your kids are investors before they can drive. The compounding started before they had opinions about money. You stopped checking the balance years ago. The machine never needed you watching it. It only needed you to start it, and then to leave it alone. Somewhere tonight, someone is deciding whether $20 is even worth putting away. They think the $20 is the whole story. It never was. The habit was always the story. The $20 was just how it began. They don't know that yet. But they will.